Hello, crypto traders, and welcome to Bitcoin News. Something important is unfolding in the crypto markets today. Bitcoin has dipped below $65,000 amid fresh tariff uncertainty, yet it's already staging a partial rebound to around $66,300. This isn't just noise, it's a stress test for institutional flows and macro resilience. If you're positioned in crypto, these swings could redefine the near-term narrative. Stay tuned as we break it down. Let's start with the numbers. Bitcoin is trading at approximately $66,300, down about 3% in the last 24 hours. Key support sits at 65,000, with resistance building around $68,000 to $72,000. The total crypto market cap stands at roughly $2.4 trillion, reflecting a 1 to 2% pullback. Bitcoin dominance remains elevated around 55%, showing its role as the market anchor. Ethereum is at $1,915, off about 3.5%, with its own support near $1,850. Funding rates on Bitcoin perpetuals are neutral to slightly bearish, hovering between 0 and 0.005%, indicating balanced but cautious derivatives positioning. Ethereum funding has flipped negative on some exchanges, like negative 0.01% on IBIT, suggesting bearish sentiment but a potential carry for longs. So what actually matters today? First, spot Bitcoin ETFs have now seen 5 consecutive weeks of net outflows, totaling $3.8 billion. This is the longest streak since February, with $316 million exiting last week alone. BlackRock's IBIT led the bleed at $303 million. Why does this matter? These outflows signal institutional caution amid macro headwinds, reducing liquidity and amplifying downside risks. But it's worth noting the rotation. Solana and XRP ETFs saw modest inflows, hinting at diversification away from Bitcoin and Ethereum. Second, a tariff hike to 15% has rattled markets, triggering Bitcoin's 4.8% drop to $64,300. The Supreme Court's ruling limiting emergency tariff powers adds uncertainty, though existing deals hold. This macro compression could weigh on risk assets, but a resolution might stabilize sentiment. Third, US Q4 GDP came in at a soft 1.4% annualized, well below the 3% expected due to shutdown disruptions. Core PCE inflation hit 3% year-over-year, which is sticky and still above the Fed's target. Why does this matter? Slower growth and persistent inflation limit any hopes for rate cuts, keeping pressure on high beta assets like crypto. Fourth, discussions at Ethereum Denver highlighted quantum threats to Bitcoin's long-term security. This isn't an immediate danger, but it does underscore the need for protocol upgrades, which could potentially impact investor confidence in Bitcoin's long-term dominance. Right now, this looks like consolidation within a broader downtrend. Bitcoin is trading in a $60,000 to $75,000 range, forming a potential bearish pennant on the daily chart. It's below key moving averages, including the 200-day, which is far from the cycle highs. This setup suggests distribution rather than a breakout, driven by macro compression and the ETF outflows we just discussed. Yet, there are some counterpoints. Whale accumulation and reduced short exposure in CME futures hint at a possible base forming. Extreme fear in the market sentiment could set up a contrarian rebound if the tariff situation clarifies. Watch $72,000. That's the level that could flip funding bullish and confirm upward momentum. A break above that signals renewed strength, potentially targeting $75,000. On the downside, a close below $65,000 increases the risk of testing $60,000 or even the $50,000 to $52,000 range in a deeper retrace. Tariff resolutions or stabilizing ETF flows could change this narrative very quickly. Inflation data this week will also be key. Sticky prints raise recession risks under the current policies. That's today's breakdown. Data-driven insights to help you navigate these shifts. What do you think? Is 65,000 the floor, or are we headed lower? Drop your key levels in the comments below. For more daily analysis like this, hit subscribe. Stay ahead with grounded, institutional-grade perspectives. Tomorrow could bring clarity or more questions. Until then, trade smart.